India, cultural and financial security. India's relationship with gold is unique. Indian households are estimated to own more than 25,000 tons of gold, more than all the world's central banks combined. Gold plays a central role in weddings, religious festivals, and family wealth preservation. It is not just an investment, it is part of social and cultural identity. At the same time, the Reserve Bank of India has been steadily increasing its official gold reserves. This reflects both tradition and strategy. In a country where trust in tangible assets runs deep, gold strengthens confidence in national reserves. Economically, gold also serves as protection against rupee inflation and reduces reliance on the US dollar in international reserves. For India, gold represents both heritage and hedge, a bridge between culture and financial prudence. Turkey, defense against inflation. Over the past decade, the Turkish lira has lost more than 80% of its value. In 2022, inflation surged to a peak of around 85%. For ordinary citizens, this meant rapid erosion of purchasing power and savings. As confidence in the national currency weakened, people turned to gold as a store of value. Gold buying surged at the household level, reflecting a search for stability. The central bank followed this trend, purchasing 148 tons of gold in 2022, the highest amount globally that year. This move was both defensive and symbolic. By increasing gold reserves, Turkey sought to reinforce monetary credibility and align national reserves with the preferences of its population. In times of extreme inflation, gold becomes more than an asset. It becomes a currency of trust. United States, gold as power symbol, the United States holds the largest official gold reserves in the world, more than 8,000 tons. Most of this gold is believed to be stored at Fort Knox and other secure facilities. Whether or not the public sees it, the scale of these holdings carries enormous symbolic weight. Although the US dollar is no longer formally backed by gold, these reserves still reinforce global confidence. Gold represents continuity, a tangible link to the era when the dollar was directly convertible into gold under the Bretton Woods system. That historical legacy continues to shape perceptions of American financial strength. In many ways, US gold reserves function as a foundation of credibility. They signal that behind the world's dominant reserve currency stands the largest gold stockpile on Earth. It is not an official guarantee, but it is a powerful symbol of monetary authority and long-term stability. Europe, gold and sovereignty. And European nations have lived through currency collapses, hyperinflation, and financial crises. That historical memory shapes their approach to gold today. In 2013, Germany repatriated a significant portion of its gold reserves from the United States and France back to Frankfurt. The move was not driven by panic, but by principle. It was a statement of sovereignty, a reminder that ultimate financial security should be physically under national control. Italy and France also maintain substantial gold reserves. For these countries, gold acts as a financial anchor, a safeguard against future instability within the Eurozone or the global system. In Europe, gold is more than a reserve asset. It is a strategic insurance policy rooted in historical experience. What gold is replacing? Traditionally, central banks held most of their reserves in major currencies such as US dollars, euros, British pounds, or Japanese yen, often invested in government bonds. These assets were considered safe, liquid, and reliable. Today, however, those same currencies face pressure from inflation, rising debt levels, and geopolitical tensions. Government bonds are no longer viewed as risk-free in the way they once were. Political decisions, sanctions, and monetary expansion have introduced new uncertainties. As a result, gold is gradually replacing part of these paper-based reserves. Unlike bonds or foreign currencies, gold is not dependent on any government's promise to pay. It does not carry default risk. For many central banks, it has become the ultimate form of financial security, neutral, tangible, and globally recognized. A world without trust. The freezing of approximately $300 billion of Russian foreign reserves sent a powerful message to the world. geopolitical conflict can directly impact financial assets. Reserves that were once assumed untouchable suddenly became inaccessible. This marked a turning point. The global financial system is increasingly intertwined with politics. Access to payment systems, reserve currencies, and international markets can be influenced by diplomatic relationships. In such an environment, gold becomes uniquely attractive. It carries no credit risk and no counterparty risk. It is not a promise written on paper, it is a physical asset with intrinsic value. When trust in institutions weakens, gold's appeal strengthens, because in the end, when confidence fades, what remains valuable is what you can actually hold.